Let's go through today's Tesla stock news. Elon Musk is making some big moves. Twitter has reportedly purchased 10,000 graphics processing units and recruited AI talent from DeepMind for the project that involves a large language model, which could be similar to ChatGPT. And Twitter now technically does not exist anymore.
Twitter no longer exists, at least as a standalone company here, technically speaking. The Elon Musk-owned social network is merging with a new shell company called X Corp. That's according to a California court document from a lawsuit filed against the company and its former CEO Jack Dorsey by conservative activist Laura Loomer. Now, Musk first hinted at what he called X, the Everything app, last fall, before his purchase of Twitter was finalized, likening the idea to something resembling the Chinese app WeChat, which is used in a number of capacities, including messaging, payments, and booking tickets. The move has sparked considerable speculation online about what is next for the platform, and though Tesla CEO has been pretty vague about specifics, he did tweet out X very early this morning, which has since garnered nearly 30 million views.
Clearly, Elon Musk is working on a ChatGPT competitor, and I just wish I could invest in Twitter. Twitter's current valuation is probably only about $20 billion, and OpenAI is already valued at $29 billion. I think Twitter is going to skyrocket in the next few years, or maybe give it about a decade. Even though Elon Musk did not attend the Mega Factory signing ceremony, we do have a rumor here that Elon Musk should already be in China, which would confirm previous reports that Elon Musk indeed was going to go to China. And because it was not about the Mega Factory, it appears maybe there is indeed something bigger that's coming up very soon from China. We'll find out. Unless Elon Musk is just going there for fun. That's also a possibility, although certainly unlikely. Previous rumors would possibly indicate an announcement of a refreshed Model 3, or Elon Musk simply speaking to Chinese officials about the expansion of the Giga Shanghai location. Brett Winton posted USA's government previous forecasts of EV adoption. As you can see, they were terribly wrong before. Check what they were forecasting before. Literally no adoption. And then eventually they said, maybe we will have some adoption. Then they increased it a little bit more. And these are historical figures. As you can see, the historical figures exceeded all of the previous estimates already by quite a significant margin, especially those from a few years ago. And according to Brett, they have $150 million for forecasting. That's their budget. And they got this so wrong. They think EV adoption is only going to be 14% in 2040. Did they look at Norway? Did they look at China? Did they look at Europe? Did they look at any other countries? I just don't understand how you can get this so terribly wrong with $150 million at your fingertips that you can use to forecast. A lot of Wall Street is also terribly wrong about the adoption rates. They are not that off, but most of them are not right at all. And that creates a buying opportunity. And today, generally, the markets are down, but Tesla stock is actually up. After all, it does appear that there are some investors that realize, yep, this is a buying opportunity for Tesla stock. We have good news. A fairly decent analyst from Baird reiterated an outperform rating and a price target of $252 for Tesla stock while continuing the company as their best pick, which is great. This is after the price cuts, and many analysts are not really happy about it. Baird analysts seem to get it. You won't find many analysts that said buy Tesla stock even back in 2014, 15, 16, 17, 18, 19, and 20, although they did change a few times to hold. But if you were buying this whole time, you must have accumulated quite a bit of Tesla stock, so as long as you didn't sell, then you are doing fantastic right now. And they really understand this. Look right here. US price cuts continue to make headlines with Tesla margins and macro uncertainty in focus. Despite the second round of US price cuts in a short time frame, we continue to believe Tesla will be able to maintain industry-leading operating margins and is in the best position among auto peers to weather economic headwinds. Speculation of more stringent vehicle emissions rules may accelerate EV adoption further, which we see as a tailwind in addition to the tax credits for all of the EVs. These analysts from Baird, they sort of get Tesla stock, don't they? Another analyst, George, also reiterated his buy rating and the $275 price target for Tesla stock. We now have global deliveries by region and quarter. The European figures, as well as the numbers from China, are pretty accurate. The US and the rest of the world figures are sort of guesses, but these are very well-educated guesses, so this is generally pretty accurate. Some Tesla bears like to say that Tesla is overly reliant on China, and while China, of course, is an important market for Tesla, the truth is, US is the single most important market for Tesla. China, of course, is very important, and while Tesla still produces a lot of vehicles in China, that is going to change in relative terms with Giga Berlin and Austin ramping up quickly and the new factory in Mexico being built. But it is important to point out that Tesla is an absolute force within China. Check these numbers. These are best-selling vehicles in China between 29,000 USD and about 3,500 USD. Tesla Model Y, of course, is number one at 55,000 sales for the month of March. Tesla Model 3 almost at 22,000. And then number 3 is nowhere near even close to Tesla Model Y. These gaps are so big that you would think Tesla sells vehicles at much lower prices than everyone else. Right? How about we just look at the whole market within China during the whole quarter, not just at the end of the quarter, which is March, which works in Tesla's favor. So Farzad put together this. Here is Tesla Model Y clearly beating everyone. And remember, these are all vehicles that were sold within China in the first quarter, including gas-powered vehicles, economy vehicles, every single car that was sold in China, and still Tesla Model Y clearly number one, selling at about $38,500. That's the starting price. And look at number 2 place, it's $27,500 if you want to buy it. And then number 3 starts at about $15,000. Yet Tesla is absolutely humiliating everyone else, even though Tesla is selling the most expensive vehicle that is also a battery electric vehicle, which many people still do not want. There are a few other EVs on this list, but that is not the majority of vehicles here. Most of them are gas-powered vehicles, so Tesla has 2 spots here and the 2 most expensive vehicles at the same time. This year, the Model Y is going to be the world's number 1 best-selling vehicle. I mean, look at the Toyota Corolla here sitting rather low in China. And it is not just China where Tesla is selling these Model Ys really well. In Germany, you would think that Tesla would have a much harder time because you have so many well-established automakers within Germany. And while Tesla still needs to catch up to a few models, Tesla is really close to being number 3 and number 2. Number 1 is still a little bit further away, but this is Germany. This is where people love the Volkswagen brand and Golfs. How many Toyotas do you see on this whole list? You only see one Toyota Yaris and nothing else. Tesla is outselling all Toyota vehicles in Germany. Ross Gerber sold a few Tesla shares, and ARK Invest's Tesla's top position is now under 10%, so we could expect some buying from Cathie Wood in the near future. BMW just reported that their Q1 units are down 1.5% year over year, despite EV sales actually being up quite a bit, which then implies, if you do the math, that their internal combustion engine sales are down by about 7%. And this is what all of these automakers will have to deal with. They will be losing sales in their old business, and they will be struggling to make up for the lost profits with EVs because, EVs are losing money for all of them pretty much. And the next interesting thing is they say BMW remains on track for slightly higher sales this year despite a dip in demand in the first quarter. So you have delivered less vehicles so far this year compared to last year, but still you are going to deliver more vehicles. Well, we'll see how that turns out at the end of the year. Keep in mind, they are comparing year-over-year numbers here, not quarter-over-quarter numbers. See how sort of the media treats these companies differently? These companies, they just have to beat year-over-year numbers. With Tesla, you have to do quite a bit better than the previous quarter, not just the quarter from a year ago. Look at this. GM moves deeper into mining with Energy X lithium investment. Privately held Energy X is one of several companies developing so far unproven direct lithium extraction technologies. There's no way this would turn out like one of these previous GM investments that, were invested into certainly not proven technologies or companies, so we'll see how this one goes. And Volkswagen is planning to make 25 mediocre EVs in the US by 2030 that will qualify for the $7,500 tax credit. And this is an important message to all Tesla stock investors. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.